Hi there, I'm Chris Colby and I am a property entrepreneur. What I want to do today is talk about 5 ways that you can lower your tax bill. Okay, so 5 things you can do to lower your tax bill. So what I want to do is just write these out and talk about a few items that fall into these. So number 1 is home office expenses. So what do I mean by this? So if you use your home as an office that you do all your business, so for example, maybe you have a room in your home that is your personal office, or you use a large amount of your house, such as you have a home bakery business or something, what you can do is you can apportion off the rooms that you use for business and the amount of time you use on, and you can actually claim back the expense of those. So for example, all rooms in the house take a certain amount of heating and lighting, so you can apportion off that room in the house, and then you can use that to apportion your bills. So for example, if your office space in your home takes up 10% of your property, you can then get, say, your heat and light, and you can make 10% of that bill tax deductible against your tax return. So if you're a limited company, what you can do is the limited company can pay you 10% of those expenses, or if you're self-employed, you can actually put it on your tax return as a taxable deduction, which is really, really good. So it's always important to sort of work out some data of roughly how long it is you are in the particular room working, and also how many days a week. So if you work 4 days a week compared with 7, that will obviously be much, much less. But it's always worth doing and checking with your accountant to see whether your calculations are okay. The second item that we're going to talk about is phone expenses. So there are many ways you can work through phone calls from a tax perspective. So the majority of people, what they do is they have their own phone that they use for business, but because it's their personal phone as well as their business phone, actually there's nothing tax deductible against it. So they get a personal phone on a contract with a call plan. Therefore, it's a fixed expense. They'd have that personally anyway, so you can't make that tax deductible. But there are a few ways that you can make things tax deductible. That is, if you have a landline and so this could be a home landline, but if you then pay for each individual call, what you can do is you can tot up all of those calls on your landline that were made for business purposes, and they would be tax deductible. The line rental wouldn't, because that is a fixed cost again, but definitely those calls could be. The other thing that you could do would be to have a business landline. Now, a business landline, providing you don't use it very much for personal, can be completely tax deductible. So that's the cost of the line rental and all the cost of all the calls. So it can be 100% tax deductible. Another item very, very similar to that is a business mobile phone. So that works on exactly the same principle. Mobile for business, exactly the same principle, that as long as the personal calls are like not at all, or really, really, really minimal, because they're not likely to be that picky, but very minimal, then that can be a complete business tax deductible expense. Now, another way of doing it that I like to do is using an app or a software such as voice over IP. So I use one called Circle Loop, but I'll put VoIP. And what that is that basically uses internet data, and you can create as many landlines, mobile numbers, 0800 numbers as you want through an app on your phone or your desktop. But again, as long as that's used solely for business purposes, it's completely tax deductible. So really, really, really good one to look out for. The third thing that's worth looking into is what's known as plant and machinery. So it depends what kind of business you're working in. But for me, as a property investor, the key thing for me is my computing equipment. So let me just write here, plant and machinery. So it's things like your computing equipment. So as long as you're buying, say, a laptop and it's being bought for business purposes, then it is tax deductible. We all get a capital tax allowance each year, which means you can write that balance off and then depreciate it. So if you want to learn more about depreciation, it's probably worth talking to your accountant, but it's a very, very tax efficient way of purchasing things. But anything like that, again, I'll go back to a baking business. My wife runs a baking business. She buys a new KitchenAid. It's used solely for business purposes. It's tax deductible, and it all goes and sits on the balance sheet of the organisation and is depreciated each year. So just have a think about what kind of things that you're buying to use with your business, and make sure that they are being recorded correctly in your accounts, so you can do it in the most tax efficient way. Number 4, travel and food and things like that. So within business, a lot of us do a lot of travelling, and certainly when you're an employee, you normally have a fixed place of work, and the government deems travelling from your home to your fixed place of work as commuting, so you cannot deduct any in tax at all. So what happens when you're an employee is you get your paycheck, you get the enormous amount of tax that the government takes from you initially, and then you're left with whatever's left. So you have to then basically completely fork out the travel side of it from your own money. Whereas if you are an entrepreneur running a business, what you can do is you can take your overall income, you can then take away your travel costs, and then whatever's left, along with all the various other expenses, that is what the tax is paid on. So it's very, very much more a tax efficient way to do things. So if I just write this down then, the key thing to take away from this is that if you are working from home, anywhere that you travel to that is away from your home, which is your designated place of work, means you should record that mileage because it is a tax deductible expense. Travel and food. So there are various apps and things that you can do. You can get, to travel, to record your mileage. I use one called Trip Catcher, and I think it costs me about £1 a month to do that. And what it does, it's an app that you activate when you're leaving your home to travel somewhere and when you get back, and then you can just record it. And what it does is it just uses your location and tracks that mileage that you've gone. So always worth just tracking your mileage, because once you have tracked your mileage, providing you're using your own vehicle, you can basically claim back 45p a mile up to 10,000 miles. So actually that's over a year is a sizable amount of money, because what that does is that covers the cost of the fuel, but also the wear and tear on your vehicle. And that the 45p a mile guidance is set by HMRC, so it's very, very widely recognised number. So always make sure that you record these. So even simple things like popping down the road to, if you're say a baking or food business, popping down the road to get some ingredients from a shop, you're only doing that for business purposes. So it could only be a few miles, but make sure you track it up, because over the year that could really add up. But again, that amount is tax deductible, so you can deduct that expense before you pay any tax on what's left. Food. So if you are say traveling for business, so if I, for example, travel to an area as a property investor and then spend a few days in that area looking around, obviously I've traveled up there for business expense purposes, but I do need food. I need to eat just like everybody. So it's deemed as I'm not able to obviously eat as cheaply as I would if I was at home, where I can just say pull some bread out the cabinet, make myself a sandwich. I have to go and buy things. So as long as it's on the business purposes, the food that you need while you're on that those business travels can be tax deductible. So what you need to do though is just make sure you keep your receipts and you keep records of what trip was associated with what sort of food expenses. But again, always worth doing, and you can get many different apps that will keep hold of your receipts. So I use one called Receipt Bank. What that does is I just take a picture of that receipt, once I've got the receipt, and then it just sort of files it, and then my accountant can see it and process it as necessary. But again, that doesn't cost very much either. I think that's sort of like about £2 a month as well. So again, these are really cheap apps that can save you quite a bit of tax at the end of the year. So really worth doing. And then the final item, number 5, is subscriptions and networking, etc. And then all those sorts of things, or business books, or anything like that. So if you subscribe, say, to an organisation, so for me, I subscribe to the National Landlords Association. I also subscribe to the Property Ombudsman as well, just for one part of my business. So I am registered with the Ombudsman. But all of these sort of subscriptions, they are all solely for the purpose of the business, so they are tax deductible. Another key thing is the networking. So as a business, you should do lots and lots of networking for new potential customers, clients, recommendations, etc. So if you go to a networking event, then normally there can be anything from sort of £5 to £20, depending, whether you get breakfast or a meal or whatever with them. But that expense, because you're going for business purposes, is fully tax deductible. So as long as you keep the receipt for those, you can write it off against tax. And then also the other thing I mentioned was things like business books. So if you're, say, buying a business book to learn about, say, tax, for example, related to your business, it's fully tax deductible because it's related to your business, and that's the sole reason you are buying it. So anything like that, always do keep a record of it, because you can have it against your tax bill. So there are still many, many other things that you can do, but I just wanted to highlight 5 key things as an entrepreneur working from home that you should track to lower your tax bill. Anyway, please do like and subscribe to my channel, and let me know your thoughts. Is there anything that you do that's sort of been really, really good to help you lower your tax bill? Are there any howlers that you think I've missed that is like the absolute key golden nugget for this? Please do comment below. Anyway, I hope you enjoyed this video. I'll speak to you soon. Thanks for watching.